Well, it's proving to be a disappointing start to October for US stock indices. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yesterday across the US indices it was a bit of a mixed bag. The Dow ended the session down 0.2%, the S&P was effectively unchanged, the NASDAQ added 0.7% broadly on the back of a report from Goldman Sachs which was very upbeat and positive on the tech sector for the rest of the year. However, today we have seen all the major indices lurch lower and really not looking too happy. It seems like we're continuing in with that September weakness. And remember, the S&P was down about 4.9%, just under 5% for September, lurching again lower today, testing a bit of an upsloping trend line, the bottom of an upsloping trend line at present level, so just around the 42.60 level or thereabouts. Now, we did hear from FOMC member Michelle Bowman last night. She went further than saying that the Fed should keep rates higher for longer. She actually expects there to be several more rate hikes from the Federal Reserve. A very crucial point about this at the moment is just how weak the bond market is and how high yields have gone. We saw the yield on the key 10-year Treasury note get above 4.75% this morning, has pulled back a little bit there, but that is not only is it the highest since we've seen since October 2007, but it's a bit of a headline rate. It's a sort of a line in the sand for the bond market. So if the 10 years push much beyond this, it could accelerate the rate at which bond yields continue to rise. That's weighing on the stock market in general. Other things to look at, which of course is linked to this, is the strength of the dollar. And the dollar the dollar index at the moment back to the highest level we've seen since November 2022. But also looking at the dollar yen, just shy of 150, and that again is one of these lines in the sand which may force the Bank of Japan into act to sort of try and give some support for the yen. But we have seen it back in October last year. It spiked through 150 to hit 152 very, very quickly. So all round, there's a lot of nervousness, and we are seeing a little bit of tension around all the financial markets at the moment. Also, remember, 3 o'clock this afternoon, that's BST, we're going to have JOLTS job openings from the US, and then of course we've got the stack of employment data coming out the rest of this week. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.